Today I'll be talking about market structure, the three key concepts of market structure, which are the uptrend, the downtrend, the consolidation on or the ranging market. But before I move on, I would like to touch some of the terminologies that we'll be using in this video. So number one of it is HH here. HH means higher high. Then number two is HL, which means higher low. When you see higher high and higher low, this is talking about bullish trend. And bullish trend is when the market is going in an uptrend direction. So number three of the terms is LL, which means lower low. Then the number fourth is LH, which means lower high. This lower low and lower high is talking about when the market is moving in a bearish movement, that is in a downtrend. So number five is bullish. That is when the market is creating a higher high and a higher low, which is an uptrend direction. Then the number six is bearish. This is when the market is creating a lower low and a lower high. That means the market is in downtrend. So whenever you hear bearish, you know that the market is in downtrend. Whenever you hear bullish, you know that the market is in an uptrend movement. Then when you see BOX, we have what we called break of structure. That is it. So now let's start with the first thing we have. The first thing I would like to talk about the three key concepts of market structure. I'd like to talk about the uptrend first. So what is the uptrend? An uptrend occurs when prices form higher highs and higher lows, and this signals strong buying momentum, meaning that the market is bullish at the moment. So let me give you a pictorial example of what I mean by an uptrend in the market. So here, when the market is moving in this pattern, and the market is moving in this pattern, that means the market is in an uptrend direction. It is creating a higher high. This high now, from here to here, is a higher high. Here is the higher high. Here is the higher high, and here is the higher low. That is this point. This point is the higher low. This point is the higher high. This point is another higher high. Here is another higher high. Then here is another higher low. Here is another higher high, and here is another higher low. But mind you that before we call a trend an uptrend, that the market must have a break of structure to the upside. That is, the break of structure, which is BOS, is when the market created a higher high here, then retraces back, creating a higher low. That is, this high here is higher than this high. That is why this one is called the higher high, why this one is called the higher low. So, and when it created a higher low, it must break this point. It must break this point here, this higher high, creating a new high. That is when we will have an uptrend. So here is what we call the break of structure, from this higher high to this place. So the market moves from this point up to this point. creating a higher high, then retraces back, we call it retracement, creating a higher low, then breaks this structure here, break this structure here. It broke this structure here, broke it, then moving up now. Then after breaking the structure, creating another high, a valid high, then coming back again, right, to create a higher low. Then the market moves from here again, breaking this point, breaking this higher high again, then moving to this point. So creating another higher high. That is an uptrend. But what of if the market creates a higher high, then create another higher high, then it fails, the market fails here, creating this, the market fails to break this point here, then now breaking this place, then now breaking this place here. So at this point, we'll call it a change of character. Change of character. So at this point, we'll call it a change of character right here. Because this market, the price fails to break this higher high. Then instead of breaking the higher high, it now breaks this higher low. Now it changes character, and now it's now forming. When you see something like this, that means the market has shifted from an uptrend to a downtrend movement. So that is what we call the change of character. So here, let me bring it out so that I'll show you the downtrend. Okay, so but before I move on to the downtrend, let me explain what downtrend is. Downtrend occurs when prices forms lower highs and lower lows. This indicates strong selling pressure, meaning the market is bearish. So that means uptrend is the opposite of downtrend. So you should know that. And what will tell you that the market have shifted from the uptrend to the downtrend is what we call a change of character. And what validates a trend is break of structure. Now, like I've explained downtrend, let me give you a pictorial view of a downtrend. So this is a downtrend. The market is creating a lower lows and a lower highs. So when you see something like this in the market, you know that the market is now in downward movement, which is downtrend. Here you see the lower low here. Here you see the lower high here. Then here you see the lower low again at this point. Then here you see the lower high again. So at this point, here is the lower high. Here is the lower low. Here is another lower low. Here is another lower low. Here is another lower low. So, and here, and I told you that what will validate a trend is what we call break of structure, that it must have a break of structure. So here, from here to here, the market has broken this. The market has broken this lower low, creating another lower low again. Now, it broke it again. From here, it created lower high. Then from here, it broke this lower low again, creating another lower low. That is a trend. Now, let me show you the one that is consolidation or ranging. So when you see something like this in the market is neither moving upward or downward. That is what we called a consolidation or ranging. So here, the market is creating something like this. When the market is creating something like this, that means we are in a consolidation phase. It's neither creating a higher high or creating a higher low. So that's it. So, but all this is just a pictorial drawing of it. This is just a pictorial drawing of uptrend, downtrend, and consolidation. This pictorial view is not like the same when you are looking at the chart, because you're seeing some candle moving up, moving down. They are not moving straight like this straight line I'm drawing now. So the market will be moving something like this here for an uptrend, creating something like this, breaking here, creating something like this, come back here, moving like this, then it did not break this point, stop like this, creating a higher high, then come down like this. It did not break this low again, creating a higher high again. So that's it for market structure, uptrend, downtrend. Now let me show you the market structure in the chart. This is GBP USD. I'm in 2 hours time frame. So here, let me just show us what I mean by, okay, let me start here. Let me show us an uptrend first here, because that's the first thing we did. Here we have an uptrend starting from here, creating a higher high. So this high broke this lower high, then creating a higher low again, breaking this structure, breaking this one here, creating another higher high, then coming down, creating another one. So this is example of an uptrend. The market broke structure here, it broke another structure here, and the market is still moving. So now this is a typical example of an uptrend. Now let me show us a typical example of downtrend here. Okay, you have something like this here. This is a very good example of downtrend. Here the market created a lower low here, then a lower high here, then creating another lower low, breaking this structure here, create another lower high here, then breaking this structure, create a lower low, break and create a lower high here that is not above this one, then break this structure, then moving down, creating another lower high, lower low. So here we have break of structure here, we have break of structure here, we have break of structure here. So this is a typical example of downtrend. So see another example of a downtrend. This one is very thin. Okay, here as an example of an uptrend here, this place it creates a higher high, creating a higher low, creates another higher high, breaking this higher high, creating a new higher high, then come back and create a higher low, creating a higher high again, before it's now shifted, breaking this higher low, before it now shifted, breaking this higher low now to this point. So the market has created higher high here, then higher low here, higher high here, higher low here, higher high here, then it broke this higher low here, which we called a change of character. From here, this point to this place, it broke it. So we now call it a change of character. That means market has shifted from an uptrend direction to a downtrend. Do you understand it now? So before you can be able to analyze the market, you must know where the market is going. Before you can be able to analyze what is happening in the market, you must first anticipate, know where the market is going, the direction it's moving, so that you not trade against the trend. So that's why we have, whenever you look into your chart, you have to identify where the market is moving, then know how to go about it by doing your analysis. Then let me show us the one that is called consolidation. Okay, you have, let me show us. Okay, from here, on this point, so at this point the market is consolidating. At this point, can you see that it's neither going up or going down? So here it's neither going up or going down. From here, move up, go down, go up, come down, go up, come down, go up, before it finally breaks this point. So that's it. So that's it for consolidation. And maybe for you to identify consolidation, maybe some of the strategies did not work on consolidation. So if your strategy doesn't work with consolidation, you first have to identify it and not trade when there is consolidation in the market or ranging market. So that's it. So that's it for now. Let me give us a summary about what I did, so that you can still come back and watch the video. If you don't understand it, you can still come back and watch it again. So I said that market structure is how the market moves. and we have three key concepts of market structure. Number one is an uptrend, number two is a downtrend, and number three is consolidation or ranging. And I said that when the market is moving in a higher highs, higher lows, higher high, higher lows, when the market is creating a higher high, higher lows, higher high, higher lows, higher high, that is an uptrend. The market is moving in an uptrend direction. So when the market is creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low, that is the market is in a downtrend. That is the market is in a downtrend. So when the market is neither moving up or moving down, that is ranging, that is when the market is what? Consolidating, that is ranging. So that's the end of the video.